Hey everybody, welcome. It's Pete. Thank you for joining me today in this episode of today's Best Stock Picks. It is Thursday, May 28th, 2020. We're definitely starting to see a little bit of sector rotation, starting to pull some stocks out of the universe and change them over. The tech stocks seem to be kind of flattening out a little bit. What they're calling stay-at-home stocks are absolutely seeing some profit taking and certainly not seeing the consistency of the bullish volatility that we saw for a while there. And there's nothing wrong with that. That's just a natural function of the market. So now it's our job together to find the stocks that are going to be the next wave of opportunities for us. Now, again, we have our universe of lists, which if you didn't watch today's episode of Stocks for Breakfast, definitely hop over to that one. We have basically a 20-minute lesson on how to find stocks and build your core universe and how to add and subtract stocks. So it's kind of relative now that we're seeing sector rotation. We're actually going to focus today on two stocks that have earnings. There's a bunch of stocks that have earnings today, or I should say scheduled. That's the way to say it online, right? We have TD Bank, Dollar General, Dollar Tree. The two we're going to focus on for tradable opportunities today are CRM, which is Salesforce, Costco, and the last one that has earnings today is Dell. But we're going to actually talk a little. We're going to go a little bit sideways today after we take a look at CRM and Costco specifically for stocks to trade as far as earnings volatility. But there is one stock I want to talk about today that is pretty interesting. And it really highlights what I've been focusing on in the videos and kind of answers the majority of the questions that I've been getting is understanding which stocks to trade. And it really comes down to you just need to do a little bit of work every day, and you need not much, maybe 15, 20 minutes every day to see which stocks have woken up, which stocks are going sideways and now they're sleeping or don't offer the same opportunity, and you'll add and subtract those stocks. So like last week and the week before, we had called out the stock PENN, P-E-N-N, because it came up in the scanner. It wasn't something I normally traded, and the stock price doubled in about 7 days. And it's only a $30 stock. I think yesterday closed at 32. So you don't necessarily need to have in your mind that you need to trade these $200 stocks to have opportunity to make money. I mean, a $30 stock that has a $3 move, that's a pretty significant move. When I started trading back in 2000, a 3% move for the week was a lot. Now we're seeing it in 2 hours. And by the way, hopefully you took advantage of the call that we made yesterday in Netflix. We actually got a textbook perfect trade. We were looking for an open here, a push lower down into the whole number at 400. And we ended up getting a $20 rally off of the low. I think it went down to 93.97 or something like that, and then exploded up and closed on the highs just underneath 420. So nice job if you took advantage of that yesterday. But I want to point out a couple of stocks that have now, as we see the rotation, we're starting to see a couple of these stocks come into play, and it's kind of interesting to have them on the radar. So we're going to actually take a look at those stocks now. So first of all, we're going to take a look at CAR. Again, the stay-at-home stocks versus everybody's starting to get out into the world stocks. Now, obviously, it hurts, and there's some news out there, so do your own due diligence. But from a price action perspective and a tape reading perspective, you can see the volume is actually picking up pretty cleanly here, and we are actually seeing smart money activity where they're stepping up, leaving footprints, and now we have what I call a fuel candlestick popping out of there. And not trading it now because it just moved from 10 to 22. What we want to see now is a nice, clean, light volume pause here, looking for the next move up to 32.50. So keep that stock on your watch list. Kohl's is another one actually that is meeting similar criteria. You can see how I'm working the chart here, keeping it very simple, no moving averages. I want to get in there and actively manage the charts. And we actually broke out here with a fuel candlestick as well. And interestingly, the next even remote level of resistance is up in the $40 area. So again, very similar to what we're looking for. Probably going to get one more day to the upside here at Kohl's. Look for a little bit of a pause and then see if we can make our way back up to that March $40 level. Along those same lines of stocks that are waking up right now, KBH, we're going to talk about the home builders. You can see KBH here, although KBH, again, very important, we discussed this in previous videos, that a stock meeting the criteria versus a stock being a trade today is not the same thing. So you can see actually KBH, despite the fact that we clearly broke the downtrend and we are in a new bullish move and maintaining that move since the lows, We do have resistance up here at 36. So what I'd like to see is the stock to pull back and then make a run at 40. So probably somewhere around the 32 area to justify the risk. But it's really more important the stocks are in play where we're starting to see larger consistency to the green candlesticks. And Toll Brothers as well, very similar situation where it's already traveled a decent amount for what it normally does. Remember, look to the left, see what it normally does. Looking for this to pause and then make a run at 40. So measure your risk reward there. Remember, go to the video that we did yesterday on risk reward. We got a lot of good feedback on that one. But as far as the trading today, I'm sticking with the financials. There's no reason to give up on them. You can see here, we're probably going to see a little bit of a pause today. And you can see here Morgan Stanley actually kind of coming into resistance as well. But here's a key, and I discussed this very, very big in the private community yesterday. Stick with the stocks that are doing what you expect them to do. Don't go scanning all over the place looking for other opportunity. If something that's in your list is doing exactly what you want, which is finding bids, in this case on the long side to be a buyer, don't leave them. There might not be an opportunity today because of these multiple gaps to the upside, but stick with them. You only need 1 or 2 opportunities per week, per month to have a really awesome month. So just to give you a rundown of some stocks that are going to be in the watch list, Morgan Stanley. JP Morgan has been very strange, for lack of a better way of putting it. It's doing what the rest of the financials are doing, but not trading above the open with consistency. And if you're a regular viewer of the channel, you can see that since earnings came out, I was actually looking for spots to short it just based on the guidance, but the whole sector has turned around a little bit, so the bias has changed a little bit. Goldman, obviously, is the one that we've been harping on and all over the last couple of days. Hopefully, you took advantage of these as well. But as you can see, looking to the left, this is the last place that sellers did something significant since we pushed down. So I'm looking for this to have a little bit of a pause here for a couple of days as well. Again, rounding out the sector, E-Trade as well. And American Express, actually, one that I have not looked at in a while, just made new 20-day highs yesterday. Again, it's already traveled from 76 to just under 101. So that's a pretty decent move. I'm looking for that to consolidate. I'd love to be able to bid for this stock somewhere around 96, so not up here. Pull back to 96 and then look for that next run, $20 profit target up to 116. But as far as getting into the earnings stocks today, I'm just going to compare the two. First, I'm going to look at Costco, and you can see Costco since the last earnings has basically been all over the place. Let's see, I'm not even sure. Okay, I think it's after hours, if I'm not mistaken. But you can see Costco is very volatile amid the COVID-19 window that we're trading in. It's not really consistent from one day to the next. The weekly charts are not consistent either. We're seeing 1 week up, 1 week down, inside, outside. Not really the easiest stock to have a grip on. The only thing that is obvious here is that it's consolidating for an explosion. So the big trade in Costco now, from a conviction level, is let it tip its hand and then hop on board. We should be able to take advantage of that order flow from one earnings season to the next. So out of the two, Costco versus CRM, I'm probably going to be leaning towards CRM, and I'll show you now why on the daily charts. It's a little bit more clean. So you can see that we have a really consistent bullish pattern here, really nice buying pressure. And we also have this very clear resistance level, which if you go back to here, which was March to now, this is an obvious level. We have to get above this level. Maybe we'll get above it with the earnings this afternoon. But in my vernacular, in my looking for the order flow, and again, the longer term position trades, I would love to see the stock get above 180, hold it there after earnings, and then look for a run at 200 plus. If the guidance comes in and it's not good, which I'm expecting it to be good, we'll see if that now means that we've broken the downtrend, we pause there, and the guidance will carry us as a bearish idea. So my bias going into the day for CRM is I'm looking for the earnings and for the guidance to be good, hold above 180, and then look for the first run to be up towards the 200 number. So out of the choice between those two, I'm going to be looking to trade CRM with a little bit more conviction, providing that it unfolds according to my game plan. If it doesn't, let it go. That's real trading. You don't have to force your ideas onto the market, which is where a lot of money is lost because you want to prove yourself right. But if you pay attention and have a game plan, and the game plan unfolds the way you expected it to, get in there, don't hesitate, trade it flawlessly, and make what you're supposed to on those good ideas that you work for. So if you have any questions, absolutely leave a comment. If you find these videos helpful, and especially if you made some money, that trade in Netflix yesterday was awesome. Absolutely give us a thumbs up, and don't forget to subscribe. That would be awesome too. Have a great day, everybody.